Joe Clark, part of the allocation team for the Financial Enhancement Group, and welcome to this week's Market Carver. Two quick things that we want to bring to your attention this week. Obviously, there's going to be a lot of Federal Reserve commentary that's going on this week as the Fed tries to decide what it's going to do with rates. It's positioning more than anything, in our opinion, could create some volatility, and we will watch it. But what I want to hit you with are two things to consider. We've been managing money at the Financial Enhancement Group since the late 90s. 1990s, that is. And when we look at this chart that is going around in many people's hands and saying, hey, the last 15 years, the equity markets haven't had that strong of return. Thus, the future must be very, very bright coming forward. What I would try to remind some of you is that 15 years currently includes 2000, 2001, 2002, three really ugly years to be invested in the equity market, especially if you're a NASDAQ guy. When those 3 years begin to fall off, the return of the market has been greater than what people are remembering, and this chart could serve to create some pain. Now, we would never manage money based on that chart, but people do get a hold of long-term data and try to let it feed into their mind, if you will, in terms of conclusions that they draw upon or make. What I do want to address is volatility. We've been having people show up and go, Joe, where did all this volatility come from? And the reality is part of it is the FOMC, part of it is things that are going on in China, but a big part of it is it's normal. If you look at this chart from our friends at First Trust, what you're seeing over an extended period of time, the blue line is what the market actually did for the course of the year. The orange or whatever color it looks to you on your screen is actually the amount that the market had dropped at some point during the year. And you can see great levels of volatility. In fact, the average year is right at 14% in terms of that volatility, if you will. The problem is the last 2 or 3 years, we've hardly seen any volatility at all. So when a little bit of this showed up, it really has spooked some people that are out there. Let's not forget, volatility drives people to the financial media. The financial media has not had the audience, if you will, for a while because there's not been a lot of volatility. So anytime they can spin this to make it sound more important than perhaps it is, you're certainly going to have that media spin. So pay attention to that. Hey, if there's anything we can do to be of service, please don't hesitate to let us know. If you'd like to sit down, examine your portfolio versus some of the thoughts that we're having, we're more than happy to entertain that conversation over a cup of coffee. Have a wonderful week. If you're out and about on Saturday morning, don't forget to catch the radio show, 9 to 10 on WQME, 10 to 11 on Shine 99, and of course Thursday afternoons on YLO from 4 to 5 p.m. Like I said, if there's anything we can do to be of service, please don't hesitate to call 800-928-4001. God bless. Have a great week. We'll see you again soon.